your thesis is that inflation is going to rise no matter what the Fed does, and it's actually a good thing. Can you explain it? And what kind of companies will benefit?
Yeah, well, I think first off, you got to remember the Fed controls short-term rates. Longer-term rates, I always say the bond gods control longer-term rates. And right now, if you look at it globally, interest rates are rising. The 10 years up to 1.6%. And I think why that's so remarkable is that's higher, Frank, than we were when the pandemic started. You know, January was the last time of 2020 is the last time we saw 1.6% on the Treasury. So I think one thing that we've seen here as a theme is, you know, you've seen the economy recovering at warp speed. You know, we have Operation Warp Speed, and we've seen over 100 million vaccine shots taken already in the U.S. And what that says is the economy is recovering quicker than expected. And if that's the case, inflation's probably going to continue to run hot. It's been running hot, but I think that trend's going to continue here. All
right, so you're saying it's running hot, but over the last 12 months, it's about 1.7%, so actually below the target. So you're saying it's going to go well over that 2%. What kind of, what sectors do you see benefiting from that? Is there one sector that will especially see a gain from this inflation?
Well, the one thing I've been talking a lot about, especially on this show, is cyclicals. You know, anything like energy, financials, anything that's more economically sensitive. And oil specifically, when you look at global oil consumption, that's the most sensitive to what the economy is actually doing. So if you look at like Exxon, for instance, which is up over 50% this year already, it's going to be, they have the highest, their costs are the most set, the fixed costs. Their fixed costs are set already. So anytime oil goes higher, it goes right to the bottom line for energy companies. So anything like energy, if interest rates continue to go higher, that benefits the bank's balance sheet. So anything that's more sensitive to the economy, like cyclicals, that's the place you want to have your money right now.
Any other sector that you see benefiting from this inflation?
Anything cyclical, consumer discretionary. I mean, look, once the economy reopens and it's happening quick, we're going to be outside. We're going to be buying more things with all those stimulus checks that have been bestowed upon the economy. So, you know, anything that's consumer discretionary is going to be another place where obviously going to be traveling, going to restaurants, flying, all those areas of the economy which have already had a nice boost here. That's a longer term trend as the economy reopens.
So you're seeing inflation rising, but my question to you is how much of that is tied to a successful vaccine rollout by the end of Q2?
I think a lot of it hugely connected to that. But I think the thing is, if you look at most economists on Wall Street right now, and economists, they're a cynical bunch, Frank. You know, they're always looking at things, you know, more negatively. And look, I know you're a Philadelphia Eagles fan. I am. It's okay to have a healthy dose of cynicism. But I think the one thing we've learned here is any sort of, you know, and anything with the vaccine related where, you know, the rollouts hasn't worked out as well, like AstraZeneca right now, we're having issues in Europe. That's been a slow up in the process. Is we've gotten around that, and what we've seen is the economy again has started to reopen quicker than was anticipated. So I expect that rollout to be the surprises and the positive, not the negative, even if you get a couple speed bumps along the way.
Shepard Smith here. Thanks for watching CNBC on YouTube.